Dear partners at Genesis, it's been a while since the last update, so we have a lot to cover in this update. We are combining 2 months. We are combining the update from October and November together. There is no lack of excitement in the crypto market, and so last month was very challenging to navigate. So many things happening in the space. So state of the market, we saw the collapse of the FTX exchange. Where are we right now? So let's look at the fear and greed index. This measures whether the market is in fear, which is a great opportunity, as happened in June when the fear and greed index went to single digits. It went to about 6 or so, extreme fear. And generally, it's a good time to buy in extreme fear. And the greed is when we hit about 30 or so earlier on, or 60 or so earlier on in March. So anything above 50 is a lot of greed, and it'd be a good time to kind of sit out of the market. We are roughly hovering in the mid 20s right now. So there is still some fear, but it's not like how it was earlier on in the June lows. And that's where the market is right now. And we look at different metrics. One of it is net unrealized profit loss. So it measures based on when people bought Bitcoin and sold it on chain, what is their net adjusted profit or loss. And right now you could see that the net adjusted profit or loss, so it's below zero, meaning that most people have bought Bitcoin, they are at a loss right now. And above zero is when it's at a profit. So this is a good long-term indicator to use, and we are using a 7-day moving average. And this is a detailed view into the fear and greed index as such. So this is like raw human emotions being printed in a chart. So the market usually goes from capitulation to hope, fear, optimism, belief, euphoria. And then on the way down, it's like greed, denial, anxiety. So that's how the cycle goes up and down. So we are in the capitulation range, in which a lot of people who are holding are at a loss right now, similar to what we were in 2019. If you look at it, 2019 also, we got to that space, and before that in 2015. So it's similar to what we are seeing around 2015 or so. And over a long period of time, still, we are optimistic in the short term. There is a lot more pain to come. And so what happened in November, we all know about the FTX collapse that happened, and that is going to evolve over the next few years. And we did notice a few things. The end of October, the crypto market was under pressure. We could see that in the on-chain data, and a lot of credit goes to Matt, who has been tracking the market really closely. And our experience trading the perpetual market since June helps us understand all the things that are happening in exchanges and how all this leverage is being used, and had some questions about, are these perpetuals going to get paid? So Matt has been closely tracking it and has a lot of experience being in the market, learning about it. And Bitcoin and Ethereum was in a technically difficult position. And also on-chain analytics, we saw a lot of miners were selling their Bitcoin position to cover their operating cost. And so there was tremendous pressure. If this is another metric that we track, is the Bitcoin balance in miner wallets. And as you can see, the balance has been steadily declining from about July or so. It's been on a decline, and there was a big drop in November. So that is one metric that we are looking at. The net position change also, right? Increased sell pressure that we are seeing again starting in September or so, is there is a lot of minor net position change. And this is, we saw a lot of miners who came online when Bitcoin was in the $50,000-$60,000 range, and it's profitable to mine then. Right now, it's not profitable to mine at all. So every single miner right now is mining at a loss. And we see that in the total hashing power, and the hashing power is coming down. It's going to flush out a lot of these miners from the market. And then we're going to rebuild again. So the Bitcoin net miner position change, people are continuing to sell. And the other thing was that the perpetual futures OI, open interest, it was declining in raising price, right? So whenever earlier on, if you see around September, the OI was declining, but the price was also declining, right? So earlier on, if you see in August, similar, right? Like now you had the OI decreasing and the price also decreasing around the same time. Whereas this time in November, we saw the open interest was declining, but the price was increasing, which is also very suspicious. So we also see that the tether, which we have been talking about for a while, tether is not backed one-to-one. And there were similar signs to what happened when the Terra Luna depeg happened. We're seeing tether kind of depeg and repeg back. So because of all these things that were happening, we made some major portfolio adjustments, and we believe that we could reacquire them. We are in cash right now, but we can get back in at a better price. And probably the first time in the last 6 years that we have sold out of our major position in Ethereum and Bitcoin. So the Bitcoin that we've been accumulating for the last 6 years, we have sold out of it, Link, Polkadot. And we have also used some of the other exchange access that we have to be able to reduce our exposure to Beefy. So that is a big change from right when we started looking into and investing into the space. And why did we do that, right? Mentioned about some of the short-term indicators that we are seeing, but also if you take a step back and look at the Fed's fund rate, we have had one of the steepest increases in the history. And typically what happens is that, if you go and look at all the gray bars or the recession period of time, the recession starts when the interest rate kind of pauses, right? So, if you like the coronavirus induced, recession is an anomaly. But if you look at before that, around 2008, 2009, interest rates stopped increasing. We had a recession, same in 2000. There was a temporary, in 1990, we were going into declining. They paused, again, no recession. So if you just go back out of the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of the last recessions, 8 of them happens when there is an interest rate pause. So looking into 2023, when the interest rate pauses, most likely we're going to go into a recession. There is a lot of and macroeconomic conditions which are not favorable, and crypto has never been in a bear market, in a bear market in the whole of financial industry, right? The last 12 years has been a bull market, and we have to know how crypto is going to perform in a bear market. And the 530s curve, it's re-steepening, and which also is an indicator for the next few months, especially 3 to 6 months. I think the overall financial market itself is not very sturdy, and crypto is a smaller bay in the bigger global financial market, which is an ocean, and what happens in the ocean affects the bay. But right, it doesn't mean that we are out of the crypto market, so to speak. Still long-term bullish. Technology doesn't stop, right? How do we invest in an area in which you have so much uncertainty, and we are looking at areas where we can invest where there is certainty, right? One area of certainty is that technology doesn't stop, right? Now if you go and look at the technological progress in terms of price per computing on a chip, World War I, World War II, right? All the things that happened, the oil crisis, the global financial market meltdown, the 2000 stock market meltdown, right? The dot-com bust, 2008 real estate mortgage bust. Across all of it, technological progress never stopped. Similarly, if you look at the adoption, that's the one thing that we are looking at is adoption. So adoption, we measure it in terms of the number of wallet addresses with non-zero balance, and that has been on a steady incline, right? So maybe there was a short decline around 2017 or so, but if you take a step back, the adoption is continuing to increase. Similarly, Ethereum wallet address is much more dramatic. The Ethereum number of wallet addresses with non-zero balance also continue to increase. So the adoption is not stopping, On top of that, you have the Coinbase BlackRock partnership, and BlackRock, right, they're one of the largest asset managers in the world. Aladdin is their platform that provides institutional access to other investors for access to crypto. And Coinbase has mentioned that they're going to launch it in phases. All of it is not going to happen. And you have about, BlackRock managing about 30 trillion or so, and some of it is going to come into the crypto market, right? So that adoption is not stopping, and as that continues on, we are going to see the adoption increase, providing access to wider set of audience for these crypto assets. That is going to increase, on-ramps are going to increase, and that will also eventually result in the price of Bitcoin increasing. There is a phenomenon called the Coinbase effect. What happens is when a coin gets listed on an exchange, like for example, Compound, then the price increases. Why? Because before that, to be able to buy these tokens is very difficult, right? Like now you need to go and have Ethereum, use Uniswap, and then you have to do some Ethereum transaction to go from Ethereum into Compound, which is so complex for someone who is not well versed in the DeFi ecosystem. And when Coinbase makes it easy for people to access, you see 10, 20 times price increase just from being listed on Coinbase. And even in the whole crypto space, Coinbase is a smaller market volume. And when someone like BlackRock provides access to these assets, then it's going to be, you're going to see the BlackRock effect of being able to have access to these assets, having a solid custodian where these assets are kept secure. And we're going to be seeing that probably in the later half of next year, because they said they're going to be releasing in phases. They just released a Bitcoin trust, and you're going to see the money flow into Bitcoin and then into all of this bullish for the space over the long term. So even though the next months are pretty beyond that, still believe in the continued adoption of cryptocurrencies, and we are waiting for the right. We'll be able to buy at a much cheaper price than what it is at today. You could see the Ethereum supply has been reducing, right? Like the Ethereum supply since the merge has been net negative, meaning Ethereum is a deficit. The sub-Ethereum is getting smaller and smaller. And the leaderboard, we looked at it in our previous update, that one project that launched, which was crypto, it burnt about 4,500 Ethereum. And now that project has launched successful, you have other projects like Uniswap continuing to burn, right? Like burnt about 5,000 Ethereum or so. And these Ethereum is taken away from supply. It is gone forever. So what it means is that the remaining amount of Ethereum is going to become even more valuable. So all of that is bullish come to the end of our presentation today. And I want to get some feedback, what do you like about the update today? I know I've been in touch with you individually and giving some updates as we are navigating the space. Appreciate the principal for not being able to provide the update last month, and would like to get some feedback, to be able to address all the questions. And if there is something that we can improve on this presentation, greatly appreciate you tell me back, or if you have some questions, reach out. Thank you, and we'll see you in the next month. In case get to connect, have a wonderful holiday time. Merry Christmas, and we'll see you in the new year. Bye.